Hi, this is Arvind Talley with Elixir Mortgage Lending. Today I want to speak regarding the steps to get started with your home purchase. Before you speak to a real estate agent, before really looking out for what homes you can afford, the best thing you can do is pull your credit. And I would say pull your credit yourself. You can do it on a consumer credit report. Consumer credit report is like a Credit Karma or companies of such. It's usually a soft pull just to make sure that the bills that are showing up or the debt that's showing up, the first simple thing is they're yours and not anyone else's, or there's no surprises. Then please keep in mind a financial credit report is what a lender pulls. It's different than a consumer credit report. Generally, a consumer credit report could show up to 20 or 30 points higher than what a consumer or a financial would. A financial credit report is what the lenders and banks do, which has your revolving debt, installment debt, and mortgages if you have other properties. Then after you see what your debt is, your next step should be to see if there's some of that debt that you could clear off of your credit. So if there's debt there, I would start with the smallest ones, the easiest ones to get off first, start paying them off. And once you do pay them off, please don't close any of those accounts, just leave them. Just get it to a zero balance and leave it. If you have 60 to 90 days, generally your score could rebound too if there's a need for a rebound. If you don't have that, not to worry. As far as income goes, if you're a W-2, we can go with your gross income. If you're self-employed, we can go with your income after the deductions. However, if you own real estate and you are doing any type of depreciation, we can add that back in. And if you are retired, we can go with the gross income, and sometimes we can actually gross the income even up higher. And once you are ready, we would have a conversation. It would be a verbal conversation, basically of what's coming in and what's going out and where you would qualify based on your credit score and the debt to income ratio verbally. We wouldn't start right off the bat pulling your credit or trying to do any of that. Once you do fill out an application and submit the documents necessary, that's when we would pull your credit. However, in some cases, depending on your situation, we may not do that until we have a property that you have already found, and now you're speaking to a real estate agent, and you're probably by then looking for a property. And other cases, if I can get you conditionally approved out of the gate, that is a stronger position, especially in this market, depending on the investor we'd be using. Some investors won't give us conditional underwriting without a property address. Others may. So depending on the circumstances, we would start from there. As far as getting started, my best suggestion is this process should take place 3 to 6 months before you're actually starting to look. Now, if it's a smaller time window than that, that's okay too if you have good credit. If you have so-so credit, then you might get dinged a little bit here and there or may end up in an inferior program. But this is the suggestion is to start 3 to 6 months in advance. And if you have school debt or anything like that, we'd want to know if there's anything deferred, how long it'll be deferred, whether you're in school now or not when you graduate. If you have any questions, feel free to reach out and we'll go from there. Thank you.